Hey everybody, Gary with Basecamp Trading. Let's take a look at a low risk entry setup we had on crude oil futures today. You can see that crude, starting in the London sessions, changed trend. You made a higher high and a higher low. 5 and 13 across to the upside, 50s above the 200. Fast and slow line cross to the upside, move back above the zero line. Had this little pullback right here, and then you put in this reversal doji right there. That bar was a reversal doji. 5 and 13 had kind of flattened out. Momentum actually had gone temporarily negative on this pullback right here. 5 and 13 flattened out, and then this bar opened right here, pushed down, left this bottoming tail, and then triggered this reversal doji to the upside. Again, what makes this a reversal doji is the low was lower than the previous bar's low, and you finished in a doji. The next bar triggers it. If it triggered it to the downside, it's just a continuation doji to the downside. If it triggers it back to the upside, makes it a reversal doji back to the upside. Left this big bottoming tail. Then the entire body of this bar was all buying as you were triggering that reversal doji to the upside, also causing the 5 and 13 to separate back to the upside, confirming that was momentum. This bar caused the momentum fast and slow line to cross back to the upside, and then it was followed up with another really bullish bar. Opened right here at the bottom, closed very near the top, left a little topping tail right there, closed near the top. This bar was a little iffier, and again, it's because we had hit significantly overvalued right here. So we know that when we hit significantly overvalued, that we can pull back, consolidate, or reverse. In this particular case, we pulled back, consolidated, and then the next bar opened again at the bottom, pushed higher, left a little topping tail. But this bar right here, if you we're trading it, would have locked in your $1,000 per contract. I always take my runner off at 100 ticks. I get 100 ticks, my runner comes off. Your entry on this would have been 40.31. Your risk was only $131, $132. If you put it just underneath there, but you didn't even have a 15 tick risk, and 15 ticks, in crude these days, and especially on a 30-minute chart, that's nothing, for your reward. Again, you would have locked in $1,000 because you would have been trailing the bottom of each 30-minute bar, and you never got stopped out, and this bar would have put you over 100 ticks. So you lock in, and again, trade it any way you want, but I lock in 100 ticks. I get 100 ticks on a trade. That's $1,000. I consider that a good, solid winning trade. So should have been able to lock in at least 100 ticks on a 30-minute reversal doji in crude.